Hello and welcome to Pro Trader Strategies market commentary for Monday, July the 2nd. Yes, it is going to be a holiday week. I expect a lot of people are taking off for vacation and taking off this whole week. As a matter of fact, I took off last week in a sense where I was on vacation, and when we were leaving Michigan, it was like a flood of people coming in for the 4th of July week. So I would expect that most people throughout the United States were kind of planning the same idea, and that's what we're going to see this week is a probably pretty slow week in terms of volume. Having said that, my name is Eric Wilkinson. Some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. Keep in mind that everything that I teach you in these market commentaries is for investment purposes, but it is for you to learn these different aspects of trading and implement it into your portfolio in your own way. The reason why I can't give you a recommendation is because I don't know your risk parameters. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Usually being a Monday, we don't get a whole lot of good economic data, but today we did get some good stuff, especially here in the United States. But let's talk about across the pond in Great Britain. We got manufacturing PMI, which is Purchasing Managers Index, came in at 8.4, expected to be, that's wrong. Came in at 54.4, expected to be 54.1, so in line with expectations. We also got some PMI numbers, but remember, across the pond in Europe, we look at the flash PMI numbers. Those are the most important ones, so I'm not going to really run over those other PMIs for across the pond. In the United States, our most important PMI number comes from Institute for Supply Management, which is the ISM Manufacturing PMI, Purchasing Managers Index. Came in higher than expected at 55.4, expected to be 54.6, so better, moving the market higher. Then we also got, that was final manufacturing PMI. The ISM came in at 60.2, was expected to be 58.2, and then we got construction spending coming in at 0.4, expected to be 0.5. Then the ISM manufacturing prices paid came in at 76.8, expected to be 74.3. All right, having all that economic data out of the way, better than expected. Should it push the markets higher? Let's see what happened. We've got we've got crude oil just slightly off of the highs that we saw printed on Friday, 54.5, back in that trend channel. I do kind of expect this to roll over. We'll talk about my USO a little bit, but just with today's market action, I decided to pull the ripcord on that USO trade, which I was letting kind of meld a little bit, even though it was past my target. This major move up, I decided to kind of hold on and wait for a little bit of kink in the armor, which is what it kind of was looking like today. Gold futures coming off. I'm going to be looking to cover my GLD today. Was not wanting it to break this 50 Fibonacci level, but it does look pretty aggressive to the downside. So I'm going to probably be pulling out my bullish or my upside GLD trade today. I haven't gotten to it yet, but that's what I'm going to be looking to pull probably right after this market commentary if nothing else changes. We've got bonds slightly in negative territory. I've talked about this. Even if the equities start correcting a little bit, there's not a whole lot of room for the bonds to go. VIX in positive territory, slightly higher today, up into the teens again, as we saw for the most part of last week, but up some of the higher levels that we've seen up in this 17 area. Then Dow Jones Industrial Average off about 140 points. As a matter of fact, it opened up and just took off to the downside as the overnight equities were trading into negative territory. Much worse, obviously, than now, but we were below this Fibonacci extension for the 38% extension. That 7,000 level that we've talked about is really more or less a psychological level. It's bouncing back and forth on that right now, but believe it or not, that psychological level is going to be defended quite aggressively by the bulls. The E-mini S&Ps in negative territory by about 14 points, but above that 50 Fibonacci level that we've been talking about for the extension levels. That being said, that is going to act as resistance again today, as it did on Thursday and Wednesday. So I expect that to hold as well. I don't think that the economic data coming out has really caused this market to kind of roll over. I think it's more of a sector rotation and taking profits heading into some of the quarter end. Now it's over, but the quarter end's over, and I would expect this volume just kind of be pretty light. E-mini S&Ps, you can see overnight inventory very negative. Didn't take much of an attempt to get out of those overnight shorts. Usually the day market comes in, pushes those shorts out. Didn't really give a real major push. It did kind of push up a little bit to get those guys to shake those weak hands, and now we're starting to see the market kind of turn over a little bit. All right, let's talk about a couple of things that I was looking at. USO is correlated to crude oil. So with this being said, I had this trade on. It was against me for quite some time, and they were the July. I was long the 14 calls in there that I originally paid about 44 cents for. Now my target was that 14 handle in USO, which, you know, came quite dramatically. You can see we kind of gapped up a couple of times and popped above the 61 Fibonacci level. That's why I decided to hold on to that a little bit longer, and that worked out quite nicely. So originally I bought those for 44 cents, sold them out at 98 cents, and I did that in my IRA and in my margin account. So took both of those off in both of my major accounts. Now, Procter & Gamble, something I'm still very weary of. It came up and tested this Fibonacci level again. We're breaking down. That will work out nicely for my Procter & Gamble trade. As you can see right now, it is testing those short calls that I have on, which are the 77.5 calls, short the 77.5 calls in July. So I want that to stay below there. You know, I took all of these things into account with the value area high, the strike price, and the amount of money I was able to collect, put my break even right around here, thinking this is going to be a major resistance area. I believe it's going to hold, and we're going to start to roll over a little bit here, so that'll help me out. Right now, I'm at that gray area where I need some market direction in order to make this trade start to work out nicely, and I think I'm going to be able to get that in the next few days. So I'm staying with Procter & Gamble. Only reason why I talked about that is because I talked about it on Friday late. I don't know if everybody got that because it was so late, but I talked about USO, Procter & Gamble, and what I was going to do. Something I didn't really talk about was Costco. Costco got below the 61 Fibonacci extension level today, started really breaking down. I decided to add some short deltas with this really low implied volatility. I'm going to need to buy some options, and when I want short deltas, I need to buy puts. So I went into the September because I want that long duration. I don't want the theta decay. I want time to be right, and I bought the 195 puts in there for $3.15. All right, so I did that in my my margin, or sorry, only in my margin account right there for that one. And that's about it for today. All right, so go to Pro Trader Strategies, check out some of the webinars I've done. I've done some really great ones. We're doing a whole series from beginners where we break down the nuances of some of the Greeks, make it a little bit easier for you to remember, and start building on those strategies to get more and more risk parameter profile put into these, increase your probabilities of success. So check those out. And now we're in the advance, so if you've been around trading options for a while, you can check out these. I know you can find out how to do them online. I'm not going to lie to you. You can do that, but you can't figure out all the nuances, all these rules that I have in order to implement each and every strategy. So check that out at Pro Trader Strategies. And if you can't take that, take it easy.